You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Tuesday, December 18th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Tuesday. First thing to know is U.S. futures pointed to a higher open pre-open. U.S. stock futures pointed to a higher open, suggesting that Wall Street's 3 major indexes would bounce back from the rout the day earlier. The move in pre-market trade comes after Wall Street tumbled more than 2% on Monday, extending the worst start to a December since 1980. Second thing to know today is the U.S. dollar and treasury yields drop. Away from equities, the U.S. dollar index slumped 0.25% to 96.30, not far from the lowest level since late November. The greenback was weaker against the yen, with USD Japanese yen losing 0.4% to trade at 112.37 as risk aversion underpinned safe haven demand. The euro pushed higher, rising 0.3% to 1.1385, and the pound was also higher, with the pound versus dollar advancing 0.3% to 1.2657 amid an ongoing political deadlock over Britain's efforts to exit the European Union. In the bond market, U.S. Treasuries inched lower, with the benchmark 10-year note slipping 2.83% to the lowest since August, while the yield on U.S. government bonds with 2-year maturities slipped to a 3-month low of 2.67%. Third thing to note today is oil prices plunge. In commodities, oil prices plunged, dropping for a 3rd consecutive session, as reports of swelling inventories and forecasts of record U.S. and Russian output combined with a sharp sell-off in global stock markets. U.S. West Texas Intermediate crude futures sank by as much as $2.04, or 4.1%, to a low of 47.84, its weakest since September of 2017. Before recovering to around $48.61. International Brent crude oil futures fell $2.41, or 4%, to a 14-month low of $57.23. It last traded at $57.87. Both crude oil benchmarks have shed more than 30% since early October due to swelling global inventories. The American Petroleum Institute is due to release its weekly report for the week, ended December 14th at 4:30 p.m. Eastern Time, amid expectations of a drop of about 2.5 million barrels. Fourth thing to note today is the Fed kicks off its policy meeting. The Federal Reserve Open Market Committee begins its two-day policy meeting with a decision due Wednesday afternoon. The U.S. Central Bank is widely expected to announce its fourth and final rate hike of 2018. But more importantly, investors will be watching for signals on its plans for next year. While policymakers have pointed to 3 increases in 2019, the market is starting to bet the U.S. Central Bank may halt its rate hikes altogether as risks to the U.S. economy mount. Fears that the Fed may be too hasty with tightening policy has spooked markets this month. U.S. President Donald Trump took aim at the Fed again on Monday, saying in a tweet that it is incredible that the central bank was even considering yet another interest rate hike amid the outside world blowing up around us. White House trade advisor Peter Navarro amplified those remarks a few hours later, calling the Fed crazy for having signaled that it would continue to raise rates next year. And the fifth thing to note today is U.S. housing data is on tap. On the data front, the Commerce Department at 8:30 a.m. Eastern is expected to report building permits fell 0.4% in November to 1.259 million units. Housing starts, meanwhile, were expected to drop 0.2% to 1.25 million units. Recent data has painted a worrying picture of the U.S. housing market, which is struggling with rising mortgage rates and tight inventory. And our second story today, to follow up on the housing stuff that we were talking about, we have an article from investing.com. The U.S. housing starts rebound and single-family home segment is weak. U.S. home building rebounded in November, driven by a surge in multifamily housing projects, but construction of single-family homes fell to a 1.5-year low, pointing to a deepening housing market weakness that could spill over to the broader economy. Housing starts increased 3.2% to a seasonally adjusted annual rate of 1.256 million units last month, the Commerce Department said on Tuesday. Data for October was revised down to show starts dropping to a rate of 1.17 million units instead of the previously reported pace of 1.228 million units. November's increase in home building followed 2 straight monthly declines. Building permits increased 5% to a rate of 1.328 million units in November, powered by a jump in the volatile multifamily housing sector. Economists polled by Reuters had forecast housing starts slipping to a pace of 1.225 million units last month. The housing market is being constrained by higher mortgage rates, as well as land and labor shortages, which have led to tighter inventories. While house price inflation has slowed, it continues to outpace wage growth, sidelining some first-time home buyers. And that, ladies and gentlemen, is news you can use for today, Tuesday, December 18th, 2018. Your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.